Hey, good evening, folks. Kunal here, Bulls on Wall Street. A tricky week. We've had that break of our 50-day moving average on the S&P a little bit ago. We had this kind of slow trickle down. Um, and it was kind of one of those tricky scenarios because you got, red day, green day, red day, green day, red day, green day. So it's not like you were just straight in, the market was in a straight flush mode either. We were grinding down and it made the trading a little bit more trickier. Now the S&P 500 had a fairly nice bounce on Friday. We finished up, 1.5% or so. We saw this key breakout level at 1900. That was our spring consolidation. It got defended. It got defended, and we started to bounce. And so, looks like now that this 1900 level held, we'll see some type of potential retest of, the 50-day moving average on the S&P. This still seems to be, and this is typical, it seems, of the last 4 or 5 years in August. And August always brings the headlines, whether it's budget deficits or sequester or Europe news or now this Russia thing. These are the things that come out of the woodwork. And so, in the absence of news, this market for a long time has been grinding higher and higher. And the one thing that does add the uncertainty or kind of tends to knock it off its rails is those outside sources that you can't really control, such as geopolitical news and things of that nature. And so when those things come into play, the market tends to get a lot more shaky. And then when those items have been removed, it seems like we go back off to the races. And so something to keep an eye on is, obviously we've got certain levels in the market we got to watch, but then, also kind of, well, what's the news flow looking like? If things come out of nowhere, that's often the catalyst that kind of takes us down and will help break support. And so you got to sometimes marry these bad boys. So let's take a look though. So even though the S&P did get the bounce, we're still, we're still having some of the same patterns kind of play out. We've got a potential bear flag in the Russell 2000 here. We got down pretty close to that 1100 level. That's been support now. Geez, for 9 months or so, and now we're starting to grind higher. I would have liked to see a sharper bounce on Uncle Russell on Friday. When we see big days in the market, we want to see the Nasdaq and the Russell 2000 leading the way. Now that tells us there's some speculation going on in the market. So we're grinding higher. Looks like we have a date with these MAs over here, but in essence, this is looking like a bear flag. And so that's something to kind of keep an eye on. One of the things that I'll be doing is really watch kind of like the 30-minute chart here. Um, and we'll have to keep an eye on this bear flag that's forming right here. And so if we come out of this zone, if we can't break, and this flag kind of we take it down, that's going to give us a date with this 1100 number, and then that should, that potentially is going to take out the rest of the market. You know, um, we'll have to keep an eye on this. So even though we had a really nice bounce on the S&P, I wasn't that impressed with the Russell 2000 bounce. Let's take a look at the Nasdaq real quick. Hold on. So Nasdaq, same type of deal here. You know, after the key break of that 50-day moving average, we're farting around here under that, under this MA. Now this one's kind of right at the sweet spot. So, any real push and we're kind of back in the range, and that would get us, essentially we're at the break of yearly highs here from March. I wouldn't really say we broke it under, as we're kind of right at that sweet spot. So this area needs to hold. If we take out these lows of last week, then that brings out a whole different set of scenarios. So one of the things to watch, you can see here this 4,325 level seems to be the sweet spot. So right now we got kind of a range that we've been in for the last 4 or 5 days. It's like 43.80 and then 43.25. Well, this range is going to break one way or another, and that'll kind of give us a little bit of tells in terms of the market. So one of the things that happens when the market's a little bit shady is, you have to follow the market a lot more than you normally would. When you're in just a straight bullish thrust like you would be here, I don't even take a look at the indices. I scan for stocks, I wake up and you just let them rip. And the more you think about the indices, the less money you make. Now, when you start to break levels of support and there's news in the air, you have to kind of pay attention to the market a little bit more. And the other thing is, you have to make sure if you can't get any juice or some wind at your back in the market, it is earnings season right now. So there are catalysts all over. So, focusing your plays on stocks that have had recent catalysts or fresh news can provide you with stocks that have some independent order flow than what's happening with the market. And so that can give you kind of a little bit of added, probability. So a TKMR, a big mover on Friday. This one really smoked a lot of shorts. I can probably everybody was trying to short this bad boy. I don't have any particular bias on it. If it opens up weak, I'll look for a potential red to green. If it opens up strong right out the gate, that first candle or something like that, we get a big parabolic push. I'll look to take this thing short right at the open if I get the setup. And we'll play kind of either way. But either way, we want to have this on our list. And make sure you email your broker, call your broker, and reserve shares just in case. You never know where these things can go or fall down. I have a feeling this one might be a little bit tricky to borrow tomorrow. So many people are going to want to short this thing. So reserve some shares. I'll be emailing my guys bright and early in the morning and make sure I have some. HTCH, after this big push here, we're starting to build a range here. I'm not sure if we've consolidated enough yet to kind of break out of this flag. Obviously, a few more days would help, but it's still kind of getting into that spot. This is something we want to keep on our list. WLT, the 650 mark, seems to be kind of a sweet spot here. Now, coal stocks tend to trade a little bit thick and a little bit haphazardly. Their intraday ranges and things like that. They don't always have the best, the best setups or the best kind of momentum type of trading. So, I wouldn't chase this thing ever on pure strength intraday. You really want to make sure you have a rock solid setup. But this is, a bottoming pattern and what we'd call a base breakout. So it looks pretty good. COH is same type of thing. This is a base breakout from a bottoming pattern. Nice day on Friday. I have a feeling this one has some legs on it. LITB, a Chinese stock. This is really, the one sector of the market that's holding up really, really well here. Right, coiling up here. Once we kind of come out of this range here, I anticipate we'll get back to 7. STV, this is another Chinese burrito that now it's been about 2.5 months here. It looks like this is a much, this is a long-term kind of flag pattern. I like the look of it. It's going to trade a little bit thin at times, so I might let it break and then pull back a little bit before I take a stab at it. ACHN, you can see here we've just been sitting around at this level for a while. I think the 750 mark probably pushes this thing to close to 8 tomorrow. STLD, all these steel stocks are still really, really strong. U.S. Steel too, but this one's a little bit more coiled up than X. But I like the look of it here. You can see we're right at the sweet spot. 22 probably takes out this range. Arrow is a retail store. They have really crappy clothes, but this is a very, very long-term base breakout. Anything over 340 sets this thing going. It might need a couple more days to let this kind of 50-day moving average flatten out on top of it a little bit, but it's definitely setting up inside that range to at least make a run to 4. This type of setup is kind of the type of thing that more play in my IRA. I usually buy a couple thousand shares, put a stop under, this recent base. I use like a 30-minute chart to really line up the exact entry or exact support, and then I just let it rip. Cena, a bottom play for a Chinese name. Any day this thing's, if it breaks for this 20, you're probably going to see a run to 50, and then, boom, boom, boom. EGHT completely kind of filled this gap off its earnings push. Just consolidating here. I like this one. It's just going to, when it breaks, it's going to break. It just happens to be when, our range is getting tighter and tighter and tighter. Anything between this 8 and 820 zone, that range is tightening to the point where, if you crack like 820, 830, it's probably going to go. Grub, this is an IPO stock. After the huge push, it tried to have an IPO breakout above 40, couldn't hold. Now it's rebounded at this 35 spot and starting to round back up. I think this one's going to be in play. UA, This one is going to go any day. And when it goes, you're going to see that kind of 5-6% day, and it's going to kind of come out of nowhere. So it's one of those things that you just have to be stalking the whole time, or you swing it and you buy it and put a stop under under support here. Baidu, same type of deal, right? Earnings, had the earnings beat, and then we just come back and consolidated this bad boy. And now we're getting ready to kind of make our move. I like the look of this one. Excel, this one's going to be more of a swing stock. I tried to take a stab at it on Friday. Its intraday range just kind of stinks for day trading, but it has a nice look to it. Any type of weakness towards 4, you could probably take it with a stop under this 4 spot. I wouldn't chase it up on strength. On the other side, if you're day trading, then obviously chasing up on strength and might be good. It's due for a big day. It has the potential to have them. It just happens to be right recently this volatility's died. SCTY really tanked off earnings yesterday or on Friday. If I get a light open on this one, weak green type of open, and then you see it can't hold it, I'll short this bad boy again, and we'll see if we can kind of creep down here and get this thing down to 65. Wuba, I like the stock right here with the stop right under this base. For a run up back to the 55s. This sector is kind of hot. GWPH, now that the earnings are out of the way, if the market does come back, and this stock can hold this 80 spot, you're going to see this thing curl up and start making a run back to 90s. Only if the market's back, you start to see some people pile into these risky names. Right now, some of these riskier names, right, SCTY, Yelp, they've all been sold off. FEYE, SPLK, they've all been sold off. So this level's got to hold, and if it can, and you start to see a rebound in some of the other ones, that's your spot. EXPE, flat top breakout over 82, coming back and retesting that flat top. This is what we'd call a breakout pullback play. Easy to locate your stop loss and things of that nature. Soda, similar to COH, we're starting to. It's a little bit messy, but you can start to see this bottoming pattern come in. And, you can see it kind of failed at the 50-day moving average twice now, 3 times. This next peak over should be the one that sends this thing off. And then FEYE, we shorted this thing for like 70, 80 cents on, for an ATM type of trade. On Friday, you see this $30 mark is pretty big. It might not be tomorrow, but it could be the next day. But once it breaks under 30, you're going to see this thing back down in the 20s. So keep this on watch. So that's it for now, guys. Stay safe. Keep your wrist tight. I'll see you in the chat room tomorrow. Adios.